Okay, this is video 2. So we've done the taxes for the first tax year, if you like, right? And that's what's happening here, the first tax year. Now we want to look at what's happening in the second tax year, right? Remember that our tax years are different to your period of accounts, your period of accounts of your preparation. So what we really want to ask ourselves is pretty straightforward. We want to ask the question. I mean, here I know it says, is there a period of account ending in the second tax year? So I almost want you to focus this question. You almost ask this question, is that very period of account, remember, so from the previous example I was giving, when this person had done their 1st of January to the 31st of December, for example, this is a period of account. This is the very first period of account. Yes, we had to stop at April to do the first for the first tax year, but we then asked the question, is this, I almost want to say, is this very first period of account, so for example, it doesn't matter what it is, does it live in the second tax year? This is the question we're asking. So just look at it literally. Now it might be 1st of January to the 30th of June 2000. So let me just take a simple example. Let's go the year, why not 1718? Oops, sorry. So the year 1718. Great. So yeah, let's do this. So we have the year 1718. And so this person has traded 1st of January to the 2017 to the 31st of December 2017. This is one scenario. Okay, great. So we said, right, what we're going to do is we're going to first of all stop at the 5th of April 2017, and we will assess, if you like, right, this falls under the tax rules, if you like, of the 16 coming into 17, because that's the last day of the tax year. Now the second tax year, of course, must therefore end on the 5th of April 2018. So now saying, well, just come back to the period that this person provides. We're going to ask a number of questions. Remember, he could have done, I'm going to write another one, he could have done 1st of January 2017 to the 30th of June 2017. This could have been the person's first period. It could have been this, it could have been this. Either way, the first year would have applied equally to both, because they would both be ending by the 5th of April. So the question asks, is there a period in the second account, in the second tax year? Well, there definitely is for both. There's no doubt about that. Now let's look at what the next question is. If there is, yes. Okay, so we're going to go with that. If it is 12 months, well, that's perfect. We just work with that. 1st of January to the 31st of December. There's no question about that. Now, the next question is, if it's less than 12 months, then I just have to, it says take the first 12 months. I'm just going to have to go 1st of January to the 31st of December. Anyway, I'm going to completely ignore this period, because when I say ignore this period end date, because it wants me that if the period the person had prepared was less than, take the whole 12 months and go all the way to 2017. Now, if it was more than 12 months, which means that if the person had done something like this, instead of going to the 31st of January, they had prepared a period up to, say, the 31st of January of the following year of 2018, it's still 31st of January of 2018 is still in my period, still in there. So what they're saying is, so here you have a pretty long period. So you have like a 12 plus 1. So you have a 13-month period, which is fine. Maybe that's what the person did, and they want their year end to always end 31st of January. Or it could have been February. I'm going to change this, 28th of February. So it's still in here. It could have gone all the way to the 31st of March. It could. So that you'd have had a 15-month period then. So what they're saying is, well, it all lives in that period. So if you have that, take 12 months to the normal accounting date that falls in the second year. So you work from the back. Right. So now say, well, that's what the person wants their year end to be. So their year end, so their accounting period will now be, if you like, if this was if we were going to say February, as we had agreed, February, we would then say, well, it's going to be the 1st of March, 2017 to the 28th of February, 2018, and that's where it would work. That's how it would work. So what are my 3 options? My 3 options are that I have a nice 12-month period that lives in the year, and that's brilliant. And like I said, you just take that. You could have a short period, it could be 7 months. They don't care. Take the first 12 months, or you could have a period longer than 12 months, like I said, all the way to 15 months that lives in there. So start from the back and then take those 12 months. And that's us covering this area. And I did some questions in class. So what you really need to do is to power through and make sure you do as many of those questions. I want to keep the videos short, so you're really working on the questions. You're referring back to the text as you're working away, because we did look through some of these. Right. Let me just very quickly, let's look at an example here, if you like. This is opening year. We've done opening year. Well, actually, when I say opening year, we can look at it because it does have two. So again, I did this in class. You have a scenario here where he starts on the 1st of May, so you're going to have on the 1st of May 2015, and he's going to go all the way, of course, to the 5th of April 2016. That's the first period. Right? I want to use the next video to talk about overlap profits, but I might as well just talk about it here, doing this example. So he's done that. Now, this is the 15-16 period. So I now ask the question, this thing here, the 30th of June, does this period, does it end, if you like? It's a period, right? Can I find it in the second tax year? And the second tax year ends in 1617, and yes, I can. Then I ask the question, is it a 12-month period? And thankfully, in this scenario, actually, where are we? Here we are. So 1st of May, that's so easy to get carried away. This is actually a long period, isn't it? This is the 1st of May 2015, all the way to the 30th of June 2006. So it's actually a longer than 12-month period, right? So because it's a longer than 12-month period, I have to start from the end. So I literally will then say 1st of July 2015 to the 30th of June 2016. And like I said, from then on, it all just kind of falls into place. 1718, that becomes the 30th of June 2017. Yeah. 1st of July 2016. It just carries on. Now, of course, what you will have here, as you can observe, is that you're taxing profits between the 1st of May to the 5th of April, but then you're taxing profits again from the 1st of July. So there are some profits you seem to be taxing twice, right? So May and June escape, but then somehow July, August, September, October, November, December, January, February, and March get taxed again. So you have these overlap profits, but it's okay. Yes, you've taxed them at the beginning, but you'll be able to deduct those at the end when you close your business down. Cool, great stuff. I'm going to end there because that's really what's going on with the second year, right? So please review that and do some questions.